Next one is corporation income tax. So what is corporation income tax? It is a resident company is taxed on a worldwide income. Corporation means not the municipality. What you mean here? It is for the company. Corporation income tax. So it is the company it is the company for which you are going to pay tax. So you are going to compute the total income which is available in all its branches. The non-resident company is taxed only on income that is received in India. If the company is from India, you have to pay tax for the all the income which you are getting outside India also. But if the company is not an Indian company, you have to pay tax only because only for the tax amount for the amount which you generate within India only. Okay, so the corporate income tax CIT rate applicable to the Indian company for the financial year 15-16 is 30%. So it is very old, 30%. Now the exact percentage you look at the Government of India website. So this includes a surcharge plus education, cess and secondary and higher education cess charges. Resident companies are liable to pay a surcharge at 7%, and if the income exceeds 10 million Indian rupees, and 12% if the income exceeds 100 million. So depending on how much profit they have, you have the surcharge percentage defined. So if your company income is exceeding 10 million rupees, you have to pay 7% surcharge. This is on 15-16 financial year. And if it is exceeding 100 million, you have to pay 12% surcharge. So the effective tax rate for income up to 10 million remains unchanged at 30.9 percentage. So the effective tax will remain at 30.9 percentage. Okay. So 30 plus 7% for surcharge and another 2%. So 30.9 percentage is what they say for the company having income up to 10 million INR, Indian rupees. The corporate tax rates are proposed to be reduced from 30 to 25% over the next starting from. So this was proposed to be reduced in a phased manner. Phased means in a gradual manner from 30 to 25 over the next 4 years, starting from 15, 16, 16. So 16, 17, it will be 30, 28, 29, 28, 27, 26, and 25. So in 4 years, they plan to reduce it to 25 percentage. So foreign companies which have registration in abroad, not in India, so they are also taxed at 40 percentage in the financial year 15-16. Okay, foreign companies are taxed 40% tax for the tax year 15-16. The surcharge is 2% if the INR exceeds 10 million and 5% if the INR exceeds 100 million. So it is for Indian companies it is 7 and 12. Here it is reduced to 5 and 2 and 5. Okay, the effective tax will be at 41.2. But there, for Indian companies, it is going to be at 30.9. So, for companies which are registered abroad, definitely they have to pay more tax because they are using the Indian resources for generating their income. So, education cess and higher education cess are now removed completely. So, it is just to help the government fund the education and higher education cess details for the for poor people.